Hello, I'm Marius Alexa. Welcome to this weekly currency outlook here on Jitney Trade TV. Jitney Trade TV, the market information center of Jitney Trade. Couple of ideas to discuss. Basically, financial markets are once again in sync. This time, I believe it's in favor of a slight liquidity expansion that will help indices. I will obviously let that to my colleague Jean-Marc Bourgineau for the end of the week. And, will also help temporarily commodities, should briefly hurt the US dollar and the bull market in panic. Let's look at a couple of charts. In broad terms, I think that this week is about debating the extent of the pullbacks in the USD CAD, and the dollar index, and the extent of the unfolding bounce in the euro. And also we will present you an idea about the VIX, which is also probably entering a consolidation phase before eventually moving higher at some point in time. Dollar Canada, basically in the Canadian dollar, euro and dollar index, I will show you that we are sitting at a psychological extreme that obviously has to be corrected. In the Canadian dollar and the dollar index, we see, and also in the euro, we see excessive bullish sentiment in favor of the US dollar and against the other currencies, but we also see a situation where whereas the commercial hedgers start positioning themselves short the dollar. In the dollar index, it is pretty significant, as a matter of fact, what we are seeing. So look at this, for instance, the USD CAD daily chart, only 3% bulls as of last week. And actually as of the beginning of this week in the Canadian dollar. That essentially means we had 97% bulls in the US dollar, and one can wonder if 97% of the traders have bought, how much further could this market continue. And obviously we're seeing some type of reaction today with the market, the USD CAD sharply lower type of thing. The other thing is we see for the first time, in maybe half a year or so, a slight, long position on the part of commercial hedgers. Long Canadian, basically, commercials are beginning gradually to use, Canadian dollar weakness to buy cheap Canadian dollars. So this would typically be in conjunction with the steep uptrend we recently had of the 99 cents area. This would invite at some type of pullback. We can obviously not sustain this kind of advance for too long in any case. US dollar index also extremely enthusiastic sentiment towards the dollar, 95%. That liquidity crisis, everyone scrambling for dollars. It resulted in this sharp move higher in the index. We were announcing, I think, a couple of weeks ago that, we would have a small consolidation and, another move higher. That final move higher, I think, has arrived, and I think also it has been eventually consumed. You look at 95% bullish sentiment in the dollar, again, a very serious short-term psychological extreme. And you also look at the biggest dollar short position on the part of commercial hedgers in many, many years. I think it's about 4 or 5 years we're talking about. So I'm asking rhetorically, anyone in for a correction? We're definitely in for one. Excuse me. In the euro, 3% bulls only at the beginning of this week, 97% dollar bulls. You see it here at the bottom of the daily sentiment index. And also, for the first time in quite some time, commercial hedgers, turning net long euros. So they're using this plunge in the single currency to basically cover eventual future needs for euros. So it's essentially the same scenario like in the dollar index, just in reverse. Obviously, euro is 56% of the US dollar index as a weight in it, and I would say that we should care for a bounce right now because we can obviously not sustain this trend at this pace. We should get going with at least an intermediary upward correction at some point in time. I think it's actually underway. If anything, just to relieve the sharply oversold market condition. Now, we've spoken a top in the dollar, bottom in the other currencies, correction in the dollar, bounce in the USD CAD in the dollar index, the pullback, I mean, in the USD CAD in the dollar index, and a bounce in the euro. Let's see the extent of what we can really expect at this point in time. Canadian dollar overbought in the weekly time frame, being repelled on a weekly closing basis at a 50% retracement of previous fourth wave. Very important resistance. Projections come in, start, by, 119, 120 area, but cluster, much thicker type of thing near the 115, 117 area. And I think this is probably what we are to expect for the next maybe 6 to 8 weeks. Basically, a pullback into that area, into that 115, 117 area, a consolidation phase, and beyond that, eventually another leg up in dollar Canada. But as I just said, for now, focus on the downside risk in the short term. Dollar index, same overbought type situation, repelled not necessarily at the Fibonacci, resistance, but very close to the peak of the previous fourth wave correction. I believe that obviously, this would invite at a pullback into the 81, 83 range, and eventually then a final exhaust into the 90, perhaps 95, 96 area if dollar bulls get really excited here. In euro dollar, basically, so far the big drop has been contained within the price territory of the previous four. We were flirting, early in the week with the 50% retracement of the big 82 cents, 160 and a half cycle. And, this generated, the sharpest oversold market condition in the weekly time frame in the euro in many, many years. It would be logical, to get a bounce off these levels. And I think that the targets would be, the 133, 135. Area. Finally, if we're talking about the dollar being hurt in the short term, this would obviously have to do with some type of at least a mild liquidity expansion. Basically, the financial system should be less clogged in the weeks directly ahead than it was in the previous couple of weeks. And if we are discussing, a more lean functioning type of thing in the financial markets and in the credit markets especially, we have to look at the level of panic. And in that respect, it appears to me that the VIX, eventually after putting in place some type of very short-term momentum divergence, after forming, basically exhausting itself in a rising wedge pattern, has finally turned the corner for, several weeks to perhaps several months. I do envision the 54.63 area as support for now. If we overshoot the runway to the downside in the VIX, upside in the indices, we'll probably do even the 46, but that looks extreme at the moment. The larger bull market in VIX, the larger bull market in panic is still there. I just think that, it'll take a break for, a couple of weeks to a couple of months, which is essentially about the same time horizon we envision, for the dollar pullback and the euro bounce and the Canadian dollar bounce. So this is everything I had to say for today, folks. Have fun, happy trading, and we'll see you again next week. Bye now.